In this video, I'm going to be showing you the silver bullet strategy that helped me get funded without any daily bias. Okay, this strategy has zero daily bias, so you can get funded wherever you are. But listen, this is specifically for my people in the USA, Canada, Australia, UK, or regions like that of first tier countries. Okay, so listen very, very carefully while I explain this, because you will be getting all the gems and all the value from me. So what you're going to be doing is waiting for Asian session, which is all the way here, to be doing whatever it wants. And once Asian session is doing whatever it wants, you're going to just wait for it to do it. Okay, and as soon as you actually do that, what you need to do is wait for liquidity sweeps. Okay, once it hits your specific trading time, which will be 7 a.m. okay, it will be 7 a.m. Once it's 7 a.m. and it's your trading time, what you need to do is wait for price to actually sweep up either the highs or the lows of Asian session. So you see what we did, we marked out the highs and the lows of Asian session, and we waited for price, and as you can see, it completely swept the highs. And once it actually swept the highs, what you need to do next is find yourself a market structure shift. And as you can see, we got a very, very good market structure shift right here, and this is exactly what it is, right? So that's the market structure shift right there. And after the market structure shift, what you need to do from then on is very, very simple. You just need to mark out your fair value gap, which we did right here, and then you mark out your trade, which is going to be a 1 to 4.4, as you can see there, 1 to 4.4. And then what you're going to be doing is waiting for a price to actually go back into this area and then sweep it and completely smash your take profit. So it's very easy and simple. I'm going to be showing you this on a real chart. Okay, so as you can see right here, I'm not going to be doing a replay mode because I feel like this teaches people way more and way better than the other modes. Okay, as you can see, we're going to be waiting for price to actually sweep Asian sessions highs, right? So as you can see right here, it's already swept Asian sessions highs. As you can see, there's 2 points of liquidity right here, and they've completely been swept. So what I'm going to be doing is marking out my liquidity points just like this. And as soon as I do that, if you notice, price starts to go down straight away. And as you can see, what we said earlier about price, as you can see, we mark out the highs and the lows of Asian session and identify which part of price is liquidated. And as you can see, the highs have completely just gotten liquidated. And after that, what we need to do is find a breakage of structure where fractional highs / lows have completely been swept, and then we can reinforce our market structure shift with an engulfing candlestick if it's possible, right? So what we need to do now is find a market structure shift. And as you can see, we got a very, very clear market structure shift right here. As you can see, I'm going to just mark this out right there. Very, very clear market structure shift, which is very, very good, because now we can just mark this out. And I'm going to be showing you exactly what a fractional low actually is. So it's a series of 3 candles. As you can see, that's candle number 1, this is candle number 2, and let's say this is candle number 3, right? And it's a series of 3 candles where the candle in the middle is the one that is the most volatile, right? As you can see, I'm going to just be putting the wicks. It's going to be a bit off centered, but it's okay. As you can see, that's candle number 1, candle number 2. We just put this perfectly aligned, and this is candle number 3, right? As you can see, all the candles are doing very, very good, but the one in the middle is the one that's actually the lowest, which makes this the fractional low, because it is the fractional low out of the 3 candles. And as you can see, if price was like this, and if we had another candle on the side of this one, which had a wick which was actually smaller than this one, this will be now the fractional low, the new fractional low. As you can see, it's very, very simple to find out what fractional low is. Just study this and listen to this carefully and you'll get it. So as you can see, the candle, this one is the lowest one out of these 3, and we're going to be marking that out as our market structure shift. And as soon as we do that, all we need to do is mark out our fair value gap, which will be from here to here. Okay, and as soon as we do this, all we've got to do from here on out is our fair value gap will be here, actually, sorry about that. So our fair value gap will be here, and as soon as we actually do mark this out, what we need to do is actually make sure we type it, fair value gap, so you know your confluences and what you're actually doing. And as soon as we actually do that, we need to enter our short position right here, and I'm going to be giving you exactly where you should be putting your stop loss and where you should be putting your take profit. But just before that, for any of my serious traders who are still working 9 to 5s in the USA or UK or whatever, and you're still working 9 to 5 and you want to make $3,000 a month plus passively, okay, listen, we've got a perfect program for you, because MSPass is the thing that I built that fixes that. Okay, so we built a service that completely fixes that. What you need to do is join right now, and then we're going to pass your account. We manage it for 4 months 4 consecutive months, yes, the management is completely free, and then you get paid out every 21 days. The reason why the management is free is because you get to keep 70% of the profit of the payouts, and then we only take 30%. So we only win when you win. Okay, as you can see, the money easily deposited for Martin right here. You just got a 4k payout, and you can see right there 4,738. Okay, whatever. There's another one. Corey Joe got $5,000. You can literally get anywhere from 3,000 to 20,000 with our service. It just depends on your account size and stuff like that. Okay, so make sure you do join the first link in the description, because we are running a free limited time offer. We're running this free to the end of this month, and I've getting so much people message me. I only have 3 spots left. Okay, so make sure you do join. Message me funded or pass, and I'll get you started on our program straight away. But anyway, what we're going to be doing now is actually moving this over here, and as you can see, you're going to be placing your stop loss just at the first candle of the FVG, just like this above. And what we're going to be doing with the take profit is placing it at a 1-to-3 risk reward ratio at least. And as you can see, it's a 1-to-3 right there, and it's completely at the right place. 1-to-3, and we do have a very good stop loss placement. We're not suffocating the stop loss, we're not being greedy with the stop loss. We placed it at the perfect place. As you can see, it's completely smash take profit, and I'll be doing demonstrations like this every single day for you guys. Okay, I'm going to be showing you on a fundamental level again how to actually do this. So so let's say you have Asia session right here doing whatever it wants. Once it gets to a specific trading time, what you need to do is mark out the highs and the lows right there. And once that's done, once you marked out the highest point and the lowest point, what you need to do from here on out is actually wait for price to actually sweep out one of these 2 areas. Let's say you swap the lows this time instead of the highs, right? Let's say you swap the lows. What you need to do now is mark this out as your liquidity. And once we do mark this out as liquidity, what we need to do is actually let price play forward like this. And then as you can see, it would have completely swept this right here, okay? And as soon as it would have swept this, this is our market structure shift right there. And what we need to do from here on out is actually wait for price to come back into this FVG area, which we'll be actually marking out, because the FVG usually overlaps with the market structure shift, and when it does overlap, that means it will be a very good trade. Fair value gap right here. Okay, so as soon as we do get a fair value gap, all we've got to do from here on out is actually play price forward and put our long position right there. Once we do put the long position there, we're going to be placing the stop loss just around this area and placing our take profit at a 1-to-4 or 1-to-5 risk to reward ratio. I'm going to be putting it at 1-to-5 because I think price will actually go back up, completely smashing this. Okay, so as soon as we do that, all you got to do is wait for price to actually bounce into this area. Maybe it'll go below the fair value gap, maybe it'll bounce a few times, but it'll go up and completely smash your take profit, right? Just like it's done there. Make sure you do actually like and comment down below if you want my indicator that I do use for the specific strategy, and comment the country that you're from also, and I will send it straight to you. But anyway guys, that's gonna be the end of the video, and I'll see you guys in the Telegram. Take care.